Get Rich Slow with John Wolf. Hey, today I want to talk to you about just the very basics of shopping for a home loan. So we're going to look at a couple internet ads so that you understand what's going on and what to look for. So if you just Google Quicken loan rates, they have a page, and I use Quicken as a whipping boy because they're an easy target. So right here in the center, you see that there's a 30-year fixed conventional, and it's 3.399% interest, which is pretty good for right now. And this APR is 4.258. Now, that's oddly high. At least the space between those two numbers are oddly high. What's APR is a really important question here. So APR is if you added up all the fees to get this loan going and you sort of tack them on top of what you pay for interest over the first 5 years, and then you just sort of divide it back and ask the question like, hey, if I could pay these upfront fees in the interest rate, what would the interest rate for the first 5 years be? That's what APR is. So anyways, we have this interest rate and APR that are kind of far apart. That's not crazy or abnormal. There's nothing wrong with that, but it means you need to look harder. What is a problem and is a sign of an ad being fraudulent or non-compliant or just wrong is if the interest rate and the APR are exactly the same number. So anyways, how did they get this large spread between the APR and the interest rate? Well, let's go down to their fine print. So what they say is that this is supposed to be a $200,000 loan, 30 years, at that nice interest rate. You got to put more than 25% down. And then you have to pay 2 points at closing. So what's a point? So basically, in addition to all of the normal loan fees, they want you to pay 2% of the loan as an upfront fee. You don't get that money back directly. So that's $4,000 upfront in this case, in addition to their normal loan fees, which I'm not exactly sure what Quickens are, but the normal fees associated with getting a loan done are $3,000 to $4,000, sometimes more $1,000 total, as far as what counts in the APR. And then they're adding another $4,000 to this one. So let's look at somebody else for comparison that just displays stuff really differently. So if you want to find this one, just Google ODVA space flyer. This is actually one of the really cool programs that a lot of people don't know about. It's essentially a conventional loan for veterans in Oregon. Anyways, so here they have a rate of 3.125% interest, and that is smoking right now. And if you look here, the APR is 3.146, which is just a tiny bit different than that interest rate number. How is that possible? Well, they're not charging 3 points up front. In fact, their normal loan fees are actually a lot lower. So normal Section A loan fees are between $1,000 and $2,000, and the ODVAs, they say it right here somewhere, is $635 flat, which is a heck of a lot less. And this interest rate right here is with no points whatsoever. They actually do give an option of 1.375 points to get an even lower rate, and you see the APR to the interest rate here is a much greater difference. My advice in general, you almost never want to pay points unless it's sort of just a rounding error up or there's a good reason. So again, I'm a mortgage loan officer here in Oregon or Washington. If you want help figuring out any of these programs or you just want to support me, get in touch with me if you're doing a purchase or refinance, and watching my channel, like, share, and subscribe. Have an awesome day. Bye.